Rezolve AI, trading under the ticker RZLV, is currently moving at $6.2557, reflecting a slight intraday dip. But simple number tells you almost nothing about the absolute war being waged over this company's future. The expectation from a casual glance is another high-flying AI stock, a beneficiary of the market's insatiable appetite for anything related to artificial intelligence. The reality, however, is a battleground. A stark conflict between a company reporting explosive, almost unbelievable growth and a short seller report that accuses them of being little more than a house of cards. This isn't just a story about numbers on a screen. It's about which version of reality an investor chooses to believe, a decision that could lead to spectacular gains or devastating losses when managing their portfolio through platforms like Schwab Intelligent Portfolios or engaging in self-investing. The common narrative surrounding Rezolve AI is incredibly seductive. Here is a company that appears to be at the epicenter of the AI-driven e-commerce transformation. They boast major partnerships with titans like Microsoft and Google, a client list that includes household names like H&M, Ferrero, and Urban Outfitters, and they are putting up numbers that would make even the most successful tech veterans blush. Just recently, the company announced its first half 2025 results, reporting a staggering 426% year-over-year revenue increase to $6.3 million, shattering analyst consensus. Their gross margins are an eye-watering 95.8%. Off the back of this, they confidently raised their guidance, projecting an annual recurring revenue (RRR) exit rate of $150 million for 2025 and an audacious $500 million RRR exit rate for 2026. For anyone using online investment tools on platforms such as Fidelity or SoFi Invest, these are precisely the kinds of headline figures that scream buy. This is the expectation. A rocket ship fueled by proprietary AI destined for the stratosphere. Now, let's inject a dose of a very different and much harsher reality. Just as the bullish sentiment was reaching a fever pitch, short seller Fuzzy Panda Research dropped a bombshell. This wasn't a gentle critique, it was a frontal assault on the very foundations of the company. The report alleges that Rezolve AI's claims of having developed a proprietary large language model are, to put it mildly, exaggerated. Citing former employees, Fuzzy Panda claims the company is merely using ChatGPT wrappers. A term in venture capital circles is often synonymous with low-margin, indefensible business models. The allegations cut even deeper, claiming the company's 2024 revenue was less than $190,000 and came not from sophisticated AI solutions, but from something as mundane as soccer ticket sales. The report triggered an immediate 15% intraday plunge in the Rezolve AI PLC stock, forcing every investor to confront a deeply uncomfortable question. Is this a pioneering AI leader or an elaborate marketing fabrication? This conflict is vividly reflected in the stock's recent daily swings in trading volumes. The average volume has been incredibly high, frequently exceeding 30 million shares. This isn't quiet accumulation. It's a slugfest between bulls and bears. On one side, you have those who see the recent $200 million private placement from major institutional investors like Citadel and BlackRock as the ultimate validation. This is smart money making a significant bet, an action that speaks louder than any short seller's words. They see a company that just bolstered its balance sheet to approximately $230 million in cash, giving it a war chest to fund global expansion and strategic acquisitions. This institutional confidence, combined with the stock's meteoric rise, over 380% over the past 6 months, paints a picture of a company with unstoppable momentum, a must-have for any serious individual brokerage account. On the other side, the bears are pointing to the fine print of the company's financials. Despite the headline-grabbing revenue growth, Rezolve AI has a history of widening net losses and, more alarmingly, negative shareholder equity, which stands at a deficit of over $14 million. The company carries a not-insignificant debt load of over $33 million, resulting in a deeply negative debt-to-equity ratio. For those practicing careful online investing, these are significant red flags that cannot be ignored. The reality is that while the company projects massive future revenues, its current financial health is precarious. The tension is palpable. Is the cash burn simply the cost of aggressive reinvestment for future dominance, as the bulls believe, or is it a sign of a fundamentally unsustainable business model, as the bears contend? This is the kind of high-stakes scenario where trading platforms like Interactive Brokers become the arena for major financial clashes. So what does Rezolve AI actually do? The company positions itself as a leader in AI-powered commerce solutions. Its core product is the Brain Suite, which includes Brain Commerce and Brain Checkout. The goal is to transform the online shopping experience, moving beyond basic keyword searches to a more intuitive, conversational interaction. They claim their proprietary LLM, BrainPower, is specifically engineered for retail, eliminating the errors and hallucinations that plague more generic AI models. The promise is to increase conversion rates, boost the average order value, and reduce cart abandonment for their clients. In theory, this is a massive addressable market, and if their technology is as effective as they claim, the growth potential is undeniable. They are essentially selling the infrastructure for what they term agentic commerce, where autonomous AI agents can handle the entire shopping process for a consumer from discovery to purchase and fulfillment. This brings us back to the central conflict of expectation versus reality. The expectation, fueled by the company's own ambitious press releases and forward-looking statements, is of a business on the cusp of cornering a multi-trillion-dollar market. They are not just participating in the AI trend, they are defining its application in commerce. The reality is a company under intense scrutiny, with its technological claims and financial reporting being openly questioned. The acquisition of other companies, like the recent purchase of Vincennes, is framed by the company as strategic expansion, while critics like Fuzzy Panda see it as a way to acquire revenue streams and mask a lack of organic growth. I want you to comment below with your take. Is Rezolve AI the real deal, or is the short seller report onto something? Let me know what you think. Looking forward, the potential scenarios for Rezolve AI are incredibly divergent. In the bull case, the company successfully refutes the short seller allegations, continues to post triple-digit revenue growth, and leverages its partnerships with Microsoft and Google for massive global distribution. The recent acquisition of SmartPay could open up new frontiers in merchant fee-free digital asset payments, adding another powerful growth engine. In this scenario, the analyst price target of $9 might even seem conservative. And investors who held their nerve through this period of volatility, perhaps using investment help from platforms like Schwab Intelligent Portfolios or by making bold moves on Robinhood, will be handsomely rewarded. The company's vision of agentic commerce becomes the new standard, and Rezolve AI solidifies its position as an indispensable player in the future of retail. But in the bear case, however, the story unravels. The allegations prove to have merit, revenue growth stalls, and the high-profile client acquisitions fail to translate into sustained profitability. The negative shareholder equity and cash burn become insurmountable problems, leading to further dilution or financial distress. The class action lawsuits gain traction, creating a legal and financial overhang that crushes investor sentiment. In this version of the future, the stock's current valuation, which is built entirely on the promise of future growth, collapses. This is the risk that every investor, whether they are using Fidelity Investments for their retirement or actively trading on SoFi Invest, must weigh. The chasm between the two potential outcomes is vast. In conclusion, Rezolve AI PLC stock is not for the faint of heart. The expectation is a simple, compelling story of hypergrowth in the hottest sector in the market. The reality is a complex and contradictory picture, riddled with serious allegations and significant financial risks, alongside incredible ambition and tangible signs of institutional backing. The narrative presented by the company is one of a leader in a new field, a company executing flawlessly on a plan for global domination. The counter-narrative is one of marketing hype and financial engineering. The truth, as is often the case, may lie somewhere in between, but the market rarely rewards nuance in the short term. For investors looking at their options for online investing, from Fidelity mutual funds to trading on the Robinhood app, Rezolve AI represents a high-stakes bet on which version of reality will ultimately prevail. The depth of this conflict between perception and the underlying facts is what makes this a truly captivating and perilous stock to watch.